Hello there. Welcome back to Grade Core Accounting. In this video, I want to look at the audit reports, and we are going to look at the qualified reports in particular. So we've got a typical examination question that we want to look at, in particular according to the audit report. So we've got a question that we have here, which you are provided with an extract from the audit report of the independent auditors of Cooper Limited. Read the report and answer the question that follow. So, according to the report, are referred to shareholders. Point one, we what is the value of financial statements of Cooper Limited for the year ended 30 June 2012, set out pages 25 to 51. Then a basis of opinion, point two, the amount that was shown as addition to related buildings was for revaluations of the buildings. No audit evidence was provided. So, on the opinion, that is point three. On our opinion, the financial statements fairly present in the financial position of the company at 30 June 2022, except for the increase in the value of the fixed assets in the balance sheet. So this is the audit report. And the first question reads, explain why the audit report are to shareholders. And we know that the report has to be addressed to shareholders, since the shareholders are the owners of the company. So basically, that is the main reason why we have the report being addressed to shareholders. So this is again the reason that is stated in on our other section, whereby we are saying it is because they are the owners of the business. So basically, that's what we have. We go to the second part of our question. Refer to point one. Explain why the independent auditors refer to pages 25 to 51 in the report. So we go there and try to see on point one. So the question is, why do we have a reference to pages 25 to 25 to 51? So obviously, we know that the those pages are the pages that has information on the audit report or the audit examination. So basically, that's what we have. So that's the point that we are going to point out on the other section, that financial statements on pages 25 to 51 were subject to audit examination. So that's the reason that we are supposed to just state on the other section. So we have got the reason stated, as we are saying. Financial statements on pages 25 to 51 we are subjected to audit examination. So that's the reason that we have. And then we can also have other options that we can also include on our answers. The first one is saying they are not accountable for the other information in the annual report. So so that's what we have. And then auditors are responsible for only parts or certain pages of the annual report. So those are some of the points that you can raise. But going back to our question, you'd see that our question has got 2 marks, so is only requiring for 1 point. So so that is the point that we have. You can only be able to pick one which you can deem correct on your answer section. So basically, that's what we have for that part. Next question 1.2.3 reads, refer to point two. The directors claim that the value of the buildings increased over the years, and that the value must be increased and shown as additions in the fixed asset note. As an independent auditor, what advice would we give? Provide 1 point. So basically, that's very important. We have to provide 1 point. So according to the information that we have on point two, we can just maybe refer to our point two, and we have our point two here. The reason that we can, the answer that we can try to respond according to our point two is that it is that the GAAP prescribes that historical cost principle. It prescribes with the historical cost principle when recording assets. So that is an effect that we have according to the historic cost. So this is because that the historical cost principle says that all assets should be recorded in their original cost or purchase price. So we have also that reason as stated on other section, whereby we are saying GAP prescribes an historical original cost principle when recording assets. So basically, with recording our assets, we should record them at cost price. That is what our GAP principle, which is the historical cost principle, sets. So it stipulates. So that basically, that's at the point that we are just supposed to include our other section. Then we go to the next part of our question, which is refer to point three. The company received an A or N unqualified or qualified or disclaimer audit report, give a reason for your answer. So obviously we have to go back and go to point 3 and try to see the opinion that we have there. Does it qualify to be unqualified? Does it go? Does it fall under qualified? Does it fall under disclaimer? So basically, that's what we have. But we go back to the scenario that we are given. Our opinion is saying, our opinion, the financial statements fairly present the financial position of the capital, and that's where we have the key for the increase in the value of the fixed assets in the balance sheet. So basically, you see that the financial statement fairly present, but except for one issue that is there. So if we have such a scenario, we know that that is a qualified opinion. And remember what the qualified opinion stipulates. It stipulates that in a statement, it is a statement issued in an auditor's report that accompanies a company's audited financial statements. So it suggests that the financial statements are provided by a company was limited in scope, or there was a material issue with regard to the application of the GAAP. So you see that at the end of the day, it may also be issued if a company has inadequate disclosures in the footnotes to the financial statements. So if we have inadequate disclosures in the footnotes and financial statements, we're going to see that we are also going to see a qualified opinion. But the most important thing is that it shows that the financials are fairly presented with the exception of a specified area. So in this case, the exception that we have is that we have the increase in the value of the fixed assets in the balance sheet. So basically, if we have such a scenario, we call it a qualified report. Remember when it's a clean report, we are supposed to call it a unqualified report, or there is an unqualified opinion in the report. So basically, that's what we have in terms of a qualified report. So we have to go to other section. You see that it is a qualified report, but the reason why we are saying so is that the auditors query the increase of the assets in the balance sheet. That's the main reason that we have identified it. But also, we can also try to come up with a response by saying it includes the ways the financial statements fairly present financial position, except for the increase in the value of the fixed asset in the balance sheet. So the words except for indicates that there is one or two issues that we have that are not complying with what is required. So basically, that in that scenario, we call it a qualified report. So it means in a clean report, we are not going to have any issues. It has to be clean, 100% clean. So basically, that's what we have in terms of a qualified report. And this becomes the last part of the question that we have. And thank you for listening. And please, let's not forget to subscribe and share to our channel. Let's not forget to share the link to our colleagues who are doing the call for accounting. More typical examination questions will be uploaded on this channel. So let's stay tuned. We'll meet again in the next video. As for this video, I'm signing out.